Yo, what's up, YouTube? I'm going to keep this real super short, sweet, and simple. My name is Barrett if you're new to the channel. And as of July 2nd, I departed from working in corporate America. One of the benefits of that is I now can talk about what I'm going to talk to you about today. When I worked in corporate America, I worked at what would be considered a couple of prestigious financial firms. And at these firms, we were not allowed to talk about the stuff that I'm going to talk to you about today. This channel is going to be really good if you want to learn about money, business, finance, and marketing. I want you to know that my goal is going to be to keep it simple, but it's also we can go as deep and get as complex as you want to get. Today, we're going to talk about a stock. I'm not going to give you the technical definition. You didn't come here to be in finance school. Although if you are in finance school, you will find that the way I explain things are going to make it very easy for you to really wrap your mind around simple financial concepts, investment concepts, business concepts. All right, let's talk about a stock. Let's keep it stock very simple. On this channel, I think I will show you how to invest. But before I show you how to invest, you need to understand the mechanics of investing, the different elements of investing. OK, and if you're new here, before I get into it, I want you to know the stuff that I'm going to be telling you, easily making six figures a year talking about this. We would easily charge someone $5,000 for me to sit down and talk to you, what I'm about to talk to you about. In 30 minutes to an hour, we charge someone $5,000 for this knowledge that I'm about to give you. So I want you to know this is the real deal. It's not, some random guy. But let's get into it. All right, let's talk about a stock. So stock is very simple. Here's how I want you to think about a stock. The example I like to give is this. Imagine let's back up. Another word for a stock could be called equity. Okay, so whenever you think about stock, I want you to think about two things. I want you to think about two words, okay? I want you to think about equity and I want you to think about ownership. All three of those words, stock, equity, ownership, all three of those words are interchangeable for all intents and purposes. OK, let me break it down. So let me tell you the wrong way to think about a stock. The wrong way to think about a stock is I open up my investment app or I look at a stock on the news and I think about it from the perspective of XYZ stock is going up by $20. It was $15 yesterday. I should buy it. That's the wrong way to think about it, because what you're thinking about is you're thinking that you're buying ticker symbols and you're thinking that you're buying paper. And that's the wrong way to think about it. The right way to think about a stock is exactly how I just told you. Stock, ownership, equity. Stock, ownership, equity. I want you to flip the way you think about investing. And here's how you're going to think about it. When you purchase a stock, you are purchasing an equity, which gives you ownership inside of that company. Another way we could think about it is like this. Imagine if you owned a home, or let's say you bought a home. Let's just keep the number simple. Let's say the home was a $10,000 home. And let's say you took out a loan for $10,000. All right, you took out a loan. Well, let's make it easy. Let's say you bought a $10,000 home. You put $5,000 down on the home and you borrow $5,000 from the bank, right? So when someone, that's Goldman Sachs calling, actually, that's funny. So when somebody says, hey, how much equity do you have in your home? If you went to the bank and they said, show me your home, how much equity do you have in it? You would say, I have $5,000 in equity. In other words, you have $5,000 in ownership. Because keep it simple. If we bought a home for $10,000, right? We bought a home for $10,000. We borrowed $5,000. That's $5,000 in debt that we have on that home. The $5,000 we put in of our own money, that's $5,000 in equity or $5,000 in ownership. See, very simple. So what's the point? When we purchase a stock, we are purchasing an equity, which means we now have ownership in this company. So for example, if I bought one share of Apple, if I bought one stock share of Apple, I now have one share of ownership and one share of equity inside of Apple. That's the simple way to put it. We could go detailed and we could talk about how much equity do you have, how to calculate the percentage of equity you have. We're not going to go into that. We're going to keep it simple. Okay. This is our beginner series. So that's it. That's the bottom line. Here's how a stock works, or let's define what a stock. We're not going to talk about what makes a stock go up and down. We'll do that in another video. I just want to give you the definitions of the asset classes. Okay. A stock is an equity asset class. What that means is ownership. If I purchase one stock of Google, I now have one share of equity or one share of ownership of Google. If I purchase 100 shares of Nike, I now have 100 shares worth of ownership, 100 shares worth of equity in Nike. That's simple. That's all you need to know about a stock. That is what a stock is. All right. On the next video, I will talk about a preferred stock versus a common stock. So go ahead and subscribe. We'll get into what is a common stock? How does it work? What is a preferred stock? How does it work? And hopefully this is helpful. Hopefully this is beneficial. I'll see you on the next one. I got a lot to talk about. If there's something that you want to see specifically or you have questions about, hit me up. We'll talk about it.